Hello, hello, Mavericks. This is Rob Reinhold with Maverick Currencies. It is December 13th, 2022. Let's jump into what happened today. This is the day we've been waiting for. We've been waiting for the CPI report for about 6 or 7 days now. Last week we said was going to be a consolidation week. We said this is the week, and this week starts on Tuesday. And you know what? It did not disappoint. We got a really big move here. Let's go into what the news was. So the CPI was much weaker than expected. The headline number came out at 0.1, supposed to be 0.2. The core number came in at 0.2, it's supposed to be 0.3. So a huge pop in the market. And at one point, I saw the NASDAQ futures up over 4%, the S&P futures up over 3%, and it was very, very strong right after the report. Now, hold that thought there, because that is not how this day ended up. I want to go over one last bit of news. We did get Sam Bankman-Fried was arrested. He is the CEO of FTX, and he was arrested on fraud. So that is just a big bit of news in the crypto world. It didn't affect the crypto market at all today, but it's definitely been something that has been weighing on the crypto market for quite a bit. So as I said, huge jumps. Let's take a look at how everything closed, and all of a sudden, that's a different story. S&P up 0.7%. On any other day, you would say, hey, that's a good gain. Not on a day when it was up over 3%. The VT only up 1%. Crypto up about 2.5%. Gold was a very good beneficiary. The one thing we saw that did not reverse was the dollar. The dollar was weak all day long, and we'll take a look at all those charts. And we saw oil go up as well. But I want to take a look at all these charts and just see the big fade we had. So if you can see here, we've been talking about how we are up against these really serious long-term levels. We've got this upper trend line up here. We've got resistance, and we came up here. So many things meeting in conversions. Look at that. 3 trend lines all meeting in convergence, and we hit our heads off of it. And we came up and we said, if we can break out of these levels, then the market has a chance to get a little bit more bullish. And you can see, ouch, that was hitting your head hard on something and coming right back down. That is not a breakout. That's actually a really nasty candle. With another red candle, I think that's really going to show that this market literally can't go higher, even on really good news. When a market can't go higher on good news, that's definitely a warning sign that it's probably not going any higher for a while. It doesn't mean it's a bear market. We're going to need to see the support line break for it to be a bear market. So really around 3,900 is where this is right here. That needs to break. Once that breaks, I think you can then say, okay, the bear market is now back in force. Right now, you can see we are between levels. And we said over the weekend in our currency room that by Friday, we are going to know where the market's going. And a day like today makes me doubt if that's going to be true by Friday. It's pretty simple here. A breakout above 4,100, it's bullish. A breakdown below 3,900 is bearish. If that doesn't happen, then we're going to be stuck in the middle, kind of wondering what is likely happening, which it tells us what's happening is stagnation, sideways. We go over to the VT. The VT broke out in the morning. It was like, hey, you know what? I'm ready to go. I'm ready. And the market just sucked it right back down. And now we are below that trend line. And look at cryptos. Cryptos just had volatility today. Yes, it's an update, but it didn't go anywhere. It didn't go anywhere. There's no reason at all to be excited about crypto. So when we go in to take a look at our outlook, we were at a 0. We've got to move it up to a +1. We did have bullishness today. It's not a lot, and we are trapped between these two big support and resistance areas. So the scoring on the market is a very, very slight +1. As we're stuck between these levels waiting for a breakout, I don't think you're going to have to wait long, because look at this schedule. We talked about how many things were on the schedule this week. This schedule is crazy. Tomorrow, we have FOMC at noon with the press conference at 12:30. These are mountain times, so adjust these 2 p.m. Eastern time, 2:30 p.m. for the press conference. That is going to have another big move in the markets. Estimates are for a 0.5 point rise, and we'll see if they say they're going to be more or less aggressive going forward. This should cause another massive move in this market tomorrow. We are expecting that, so the market is likely going to be cautious going into this FOMC meeting. I could definitely see the markets resting overnight. Take a look at all the news that's coming out after that. After that, GDP out of the Kiwi, Australia unemployment report. Overnight, we get the Swiss National Bank, we get the Bank of England, and then we get the ECB. Now, we are going to be meeting live as a firm for both the FOMC statement tomorrow and for the ECB statement on Thursday. There is so much on this news table that there's likely going to be that breakout. That doesn't mean it's going to happen. But as I said last week, by Friday, I think we're really going to know where this market is going. There's just a ton on the calendar. So much that I really just want to talk about what happens Wednesday. And Wednesday is FOMC statement all day long. So let's get ready for that FOMC statement and take a look at what we see. This is where we were on the weekend. We said, hey, the CAD was weak. The dollar was weak. We said that we could see the dollar weakening to a -2 or a -3. That happened. We also talked about how the dollar and the yen were highly negatively correlated right now. And we said that this is likely going to be the best pair to trade during the week, and it has absolutely been the best pair to trade. We also pointed out that the Kiwi remains one of the strongest currencies out there. And when we take a look at performance, we can see that the cryptos, they had a good day, but I really want to focus on the Forex because cryptos are in this band. They're just not going anywhere. As you can see, dollar yen was the most negatively correlated. Actually, Aussie dollar was the most negatively correlated. That actually moved 1.8%, where dollar yen moved 1.69%. We were going to keep looking at the dollar yen as the currency that is likely to be the most negatively correlated. Take a look at all the stuff in between the euro. Swiss franc, euro, pound, it didn't go anywhere. There's no reason at all to trade stuff that's not moving. We want to trade stuff that's moving. And you can see here, what's moving is dollar and yen and Aussie and Kiwi. Let's take a look at all these currencies since Sunday and see how they've changed. Let's just take a look at Bitcoin as a proxy for all the currencies. And while we're looking at a 4-hour chart, you can see that there is some decent momentum to the upside here. We did break out of a nice little high base here. So there's no question that there is short-term more momentum to be long than short in Bitcoin and most of the other cryptos. The problem is when we go out to like a daily chart, we could make a run up here to, 18.2. There's just not a lot of meat on the bone here. There's just not a lot of clear runway. I'm going to need the crypto to show me a little bit more before I get excited about it. Let's jump into the foreign currencies. And this is the dollar. This is the dollar on a daily chart. And you can see the daily chart is still saying it's going lower. We go into the 4-hour chart, and it has got some momentum to the downside. We just made a new swing low. And you can see that swing low that we broke is making some resistance at this point. We just had a very big amount of energy released. Remember, whenever we see a big amount of energy, and we can see it back here, we typically have some consolidation after. Big release of energy, consolidation. That's a pretty typical thing to see. I would not be surprised at all if we just consolidate in this area. Now, I still like dollar short. I like dollar short going into the Fed meeting, but I am going to be waiting until after the Fed and try to see if the dollar can pop again. If you remember, last time we traded the Fed meeting, we said if we want this to pop, and then we're going to fade the pop. And that's exactly what happened, and it was a great trade. I'm going into this FOMC meeting saying, hey, I want to be short dollar, but I want to be short dollar off of a nice little pop and sell it so it fades back down. Looking over here at yen, you can see yen here is basically the opposite. Basically the opposite of the dollar, and that's because they are so negatively correlated right now. I still like dollar yen quite a bit. Going through the European currencies, you're going to see there's just nothing to get excited about. This is Swiss franc. We are going to hear from the SNB, but the SNB usually doesn't move the Swiss franc, so there's no reason to look. Look at euro here. This is just frustrating trading in here. Trading euro, this has been frustrating for the last 2 months. We go over to pound. Pound has been one that I liked a little bit better. And you can see that the pound is on a generally upward move here. It's just not moving quickly. It's just a very, very slow grind higher. And when we're looking to make trades, we want to make trades that are actually moving. Before we jump into the Aussie and Kiwi that are moving higher, let's check in on the CAD because we had CAD as the worst currency of the week, and you can see that it is still trading poorly. We did have a bottom here. There's no question we had a bottom. I would like to short off the bottom here. If this CAD can jump up, back up into this area, I'm all for shorting CAD again. But at this point right now, we don't have a ton of momentum to the downside. We do come over here to the Aussie and the Kiwi. We can see that this is where there is some upward momentum. We've got a rising EMA. We've got a break above the parabolic SAR. We don't really have anything on the RSI, so that's going to be a +2. We come over here to the Kiwi. We're seeing kind of the same thing. Rising EMA. We did get a break above the parabolic SAR, but the RSI isn't showing us that it's gaining strength. It's just telling us it's strong. It's not getting stronger. It's just maintaining the current strength. We just looked through everything, so let's update this board. We have dollar yen going different ways. We had dollar weakening, we've got yen strengthening, and we are looking to maintain that going into the FOMC. What we'd love to see is dollar pop, yen sell off, and then I would like to fade that just like we did last time, and it was a really nice trade. We saw big movements for the European currencies just going to zero. Crypto's got a little bit stronger, except for Litecoin. Litecoin really hasn't moved. It's underperformed since being the wild outperformer over the last month. We've got the CAD. It's just not as bad. It's still bad. So you can still look to be short CAD. You can look to be short dollar, but we don't expect a ton of movement from now until the FOMC meeting. Let's take a look at some of these pairs. I want to take a look at dollar yen, and then I want to take a look at something like an Aussie CAD. In case you want to completely kind of avoid the craziness of the FOMC, we're going to be focusing on things like Aussie CAD, Kiwi CAD. Let's take a look at them. In my opinion, dollar yen is still the trade. Let's take a look at the daily. And I just want to pull this back to show you how long dollar yen has been in an uptrend. It has been like 2 solid years, and we had a big, huge move from 100 all the way up to 150. That's a 50% move in a currency pair. That is huge. This trade has a lot of air left to give out if the trend has truly changed, which this chart says it has. So as you can see, the daily here, we run down, we bounce, we run down, we've bounced. We just got this nice turn here off this bounce, off the 133 area, all the way up to the 138. That's a nice 500 pip little bounce that we can absolutely sell into. It's not too late, even though we got this big move down today. That being said, when I go in and take a look at a 4-hour chart, it's not giving me a great entry point. It just really isn't. Maybe going into a 1-hour chart, you can see that we are getting back up into this resistance area, right up in the 135.75. This could be a decent place to be short. I just don't love the energy going into the FOMC statement. Why would dollar yen move overnight in the Asian and European sessions after it's already had a 200 pip move? If you can answer that question, go ahead and trade it. If you can't, you shouldn't trade it at all. We think this is going to wait in this area until it has a big move off of FOMC. The only other viable trade I see overnight is Aussie CAD. Aussie CAD, if we go here to daily chart, we can see that there is a ton of momentum to the upside. It just keeps going. We've now based for about 3 days here. If we go to this 4-hour chart, we can see that we are nicely breaking out here. We just had a nice little breakout, and look at this. This breakout level is holding for the time being. This is likely to continue to pull back until it's ready to make its next run higher. So we're waiting for some green candles before we really can jump in and be aggressive. But this is, like I said, it's the only viable trade I see overnight. We do have some news on Australia with the employment report on Wednesday night, but that's about it. Other than that, we're waiting until the FOMC. We're meeting live tomorrow. Let's go in there with a blank slate and really look to trade that report. Other than some trades like Aussie CAD, Kiwi CAD, stuff like that, we think it's best to sit out until the FOMC. We need to recognize that the dollar and the yen are very negatively correlated right now. It means that that is the best trading pair. We are going to be building most of our trades off of that expectation that the dollar and yen are the most negatively correlated right now. As I mentioned, we are meeting live as a firm tomorrow for the FOMC. That's going to be starting at 1:30 p.m. Eastern Time. And then we're also meeting for the ECB press conference as well on Thursday. That is the market recap. Thanks for joining me. Goodbye, everyone.